And welcome out to our halftime report here on a Tuesday, 10/9/2018. One of my favorite things in my life, Matt, is my standing desk. When I want to get up out of my chair, I click a button, zoom up and down. I got to get you one of those. It is your birthday coming up, right?
Yeah, but I'm not one for a standing desk here.
You're not the standing desk type.
No.
They say that sitting is the new smoking. I heard that in Silicon Valley, I believe. So I'm not sure.
Really?
Maybe we.
Sitting is the new smoking.
That's what they say. They say
Thank you,
it's
Tim.
just as bad for your health to sit all day long at work.
Yeah, I agree with that, but smoking, come on now.
C'est la vie. We'll
Yep.
figure it out. All right, let's rock and roll here today. Market's trying to shield some kind of recovery here. We'll see what's going on with the charts independently, one at a time. On a day where there's light news and a week where there's light economic news, you can get some really good days for trading, Matt. And in fact, when we were sitting here talking about the halftime prep and we are getting ready for the show, we were talking about day trading opportunities. I do want to pick your brain on that at some point. Let's start with the S&P 500, finding the 50-day moving average, changing momentum. Give me a technical read on the market right there.
Technically, I mean, the volatility of the last few days is seemingly subsiding to a certain degree. We're seeing slowing momentum in the chart right there at the 50-day moving average on the S&P 500. You got a nice little hammer candle type forming. I mean, but the positive thing in the last 4 days is, I mean, there's been a lot of volatility at the beginning of the market, but coming into those closes, the market has responded very, very aggressively bullish, recovering a lot of losses as it is moving back down. So if you're on the bull side, you obviously got to like the closes coming into the market. And if that trend does continue, I mean, that presents some really good day trading opportunities as the market is, coming down at the very beginning, then responding back up, coming into the close. So, that's something to keep an eye on for. But, Tim, if the S&P 500 gets above 2,900, which is about the high of today, that to me is a pretty decent buying signal.
I agree with that. It's a light range candle here today. The ATR in the market relative to the movement, it's a really low range candle. And you've got light volume as well, Matt, which kind of tells me the market's trying to find itself. It has not found itself bullish yet. To call it bullish is just way too premature.
No. It's rolling over. I mean, there's no doubt there. It's not something you want to get aggressive with, but there's some very good opportunities out there that are setting up for potential really strong buy candidates.
Yeah, I agree with that. I like some in tech. I like some bearish stuff as well, though. I think it's still a stock pickers market. We're going to go through them one at a time. Give me the Dow Jones Industrial Average. Let's take a look there. Okay, slowing momentum, but this one at least had a higher pivot high last week, Matt. Pullback pivot. There are a few companies in this area that I've been really attracted to. Caterpillar, Deere, and most of all, Boeing. The Dow is showing me relative strength here against the NASDAQ. I would put it and keep it above the NASDAQ, and we'll get to the NASDAQ here in a minute. Would you put it above the S&P?
No, I wouldn't. The S&P is still number one for me. The NASDAQ obviously has taken it on its chin, and we've downgraded the NASDAQ to the third index a couple of weeks ago. But, for me, the Dow Jones still represents a good opportunity out there. I like the problem, though, Tim, is I like the chart on the actual Dow more than I like a lot of the charts in the index, in the individual stocks. So I do like the Dow here, but I'm not in love with anything in the market right now. I'm pretty neutral in the market, equal bullish versus bearish. But for me, it goes S&P 500, Dow Jones, NASDAQ, then the Russell 2000. But, the positive thing about the Russell 2000, we'll get into that here in just 1 second, is that it's flowing at momentum coming into that 200-day moving average. And we've seen that 200-day moving average act as a very, very strong support in recent history. So you could see, especially if you start to get some upward movements in price up above this 1650 barrier on the Russell 2000, that could quickly come back up into resistance. So, you might have some short-term opportunities in the small cap index if we start to see price appreciation come off that 200-day moving average. But for me, that would be nothing besides short-term price action.
Yeah, I mean, you could easily get a recovery here. And actually, I was looking at some really deep out of the money bull put spreads for the rut because of that. I like.
Oh, you could definitely do that. I mean, this is a good entry for a bull put spread on cash flow condors here.
Yeah, for sure. Even the December contracts, and I
Mhm.
was even looking out into January outside of cash flow condor specific system stuff, but even just really low delta, give me a lot of time. It's a way to get capital working on a day where it's not like you're going to get a lot of confidence in anything, which is where traders tend to do day trading. They tend to do high probability trading. They focus on the niches in markets when delta is not perfectly set up, Matt.
Mhm.
Delta trading is one of the most profitable things you can ever do. If you pick the direction of something correctly, you can make the most money. But it's also can be unpredictable when the market's not showing you signals yet. I'm with you. I love that 200 MA here for the RTY. And just as much, Matt, it's the old resistance back in January
Oh,
and
I mean,
March.
if you pull out this time frame on the Russell 2000 just a little bit, pull out a little bit more time frame here, but you can see this support, this old resistance zone right here. I'll get
Mhm.
a drawing tool so you can kind of see it a little better. But if you look at this old resistance right here, that's smack dab right into that old new support right where the 200-day moving average is. That is a tremendous amount of support there for the Russell 2000 at the previous pivots as well as at the 200-day moving average. I don't like anything directionally here, Tim. I wouldn't go out there and pick up the Russell 2000 on a directional play, but I think this is a good opportunity to maybe do some cash flow stuff with bull put spreads deep out
Yeah.
of the money.
Yeah, I agree with that. 10 delta type of stuff,
Yep.
and give yourself plenty of time. Obviously, short-term cash flow trading is, and I'm going to go in a little bit deep here. It's high gamma sensitivity, which means it's just difficult to manage. Anything that is within a week or a month might not be the right plan here in this market condition. Just an opinion on that.
I think 60 days.
Yeah.
I think 60 days, apply the cash flow condor system, trading rules, and so on and so forth. But 60 days, I don't like any theta strategy here short term. There's too much volatility in the market.
Sure. Let's actually take a deeper look at the NASDAQ here. I was looking at tech here today, and tech is one of my favorite areas of the market to trade. The headline is going to be a tech rebound, and you don't see that in the broad charts because Facebook still hasn't recovered and Google looks pretty ugly, and there's still lots of stocks not doing well. But I'm looking across some of the majors in tech, Mac, and I am seeing a fight going on between the different areas. Amazon up 1% today. Apple up 1% today. Microsoft up 1.5. Maybe the strongest play in large cap tech, in my opinion, is Microsoft today. Netflix looks like it wants to recovery 1.3, but I actually still think Baba down 1.5%. Facebook up, but still looking ugly. And Google's actually red today. Very, very mixed information across the tech sector.
Well, the tech sector and specifically those FANG stocks. Let's look at those a little bit more in depth here, because for years now we have been in a top heavy market, correct?
Mm-hmm.
Okay, and those top heavy markets, Amazon, Apple, Google, Facebook, Microsoft, CRM, these types of high flying growth stocks have really been driving this market up, right? You've had a lot of stocks that have been depressed, but it has been a top heavy market. Amazon here, Tim, you talked about Amazon showing relative strength. You can't touch Amazon here. There's no trade on Amazon here.
No, it's not any kind of swing or position trade setup. You're below the moving averages, and you've got that moving average compression coming in, Matt, where you're looking for a hook there in the 20 coming into the 50. I would not bet against Amazon. I think that's probably a fool's errand, in my opinion. I think there are other plays that I would rather make in tech than to bet
I'm
against
not saying you
Amazon.
short Amazon. That's not what I'm suggesting. But what I'm also, but again, where would you buy Amazon here? I know it's up a percent today. It's having a good day relative to what the market is. But to me, this trend is over. You have to wait for the beginning of a new trend on Amazon to play directionally in any capacity. You look at Facebook here. Facebook's been a dog now for months after its earnings report from last earnings season. It's been in a consistent downtrend. Microsoft is one that I think you could literally buy today.
I did. So there you go. I did. I went long on this one. This is my favorite tech play today.
Yeah, I would agree with it. It's a strong play.
Yeah.
Yeah, I would definitely agree with that. So if you're looking at these FANG stocks, Facebook is there's no way you're buying Facebook. Amazon, there's no way you're buying Amazon today. Google has been showing a dog, but and obviously relative weak today, and you're not going to do anything in front of this earnings report. But Google's sitting at that 200-day moving average, Tim, and that the last time we saw this kind of price action was back earlier this year. and you saw some quick price appreciation coming off that 200-day moving average, I'm not saying pick it up. You wait for it after the earnings, but that to me is going to be an interesting battle zone on Google. And then you look at CRM, another high flyer stock. You can't touch CRM right now once it broke down under the 50-day moving average. And then, you know, the almighty Apple here, that's a potential bullish play here as well.
I agree with that. And so out there in the halftime crew, first of all, welcome out, guys. And good to have you here on a Tuesday morning. This is what we're talking about when we call it a stock picker's market. You know, as you break down the individual components behind what's going on in an index map, there are good buy signals and there are good sell signals. And then there's all kinds in between, you know, and even at the top end of tech, I think we're seeing that right here. If you had to go long one tech, would it be Microsoft?
It'd be Microsoft. If I look at all those different tech stocks, Amazon, Google, Microsoft, Facebook, all of them, right? And I know some of them have been categorized into a communications sector, but we still call them tech. But so if I had to look at all those, Microsoft and then Apple, those are the two I'm looking at today.
Yeah, and well, I'm long both of those. So hopefully that does work out. Maybe we're just confirming each other's opinion. You ever worry about that? I don't know. I think you'd give me a take if you had
your eyebrow.
You too. I'm just saying.
Yeah.
You know, Microsoft and Apple look good. I have a little bit of concern about the changing trend momentum in Apple, but I also believe in the top-heavy nature of Apple leading the market.
There's
Amazon,
not one stock, though, Tim, that we wouldn't say we're a little concerned about.
I agree with that.
You know what I mean?
One big one is Google. Bring up Google again here. As we're talking tech, we might as well get into this right now. Headlines on Google here. And if you look at the long term, Google's on a deeper pullback, maybe on a weekly chart or something like that. Bulls on Google could make up 50 different reasons why you should buy Google right now. I'm sure they could. But let me give you some of the things I'm very cautious about. Number one, relative weakness on a day where the market is trying to recover. I just named all those stocks that are up. Google's down. Okay. I also saw a security concern with their Google Plus platform that they're going to shut down. Not a lot of great headlines here, Matt. And I know it's on the 200, like the Russell. I know it's at some technical catalyst zones, but I'm concerned Google could be one of those things. If the market spins, this thing might lead the way lower.
Well, you know, I look at that Google Plus decision, and I think there was a lot of it to do with it wasn't working, Google Plus. It was announced a few years ago to a lot of fanfare, and it just never really caught on. They have some security concerns, you know, recently with the Google Plus and their data getting breached and whatnot. I think it's a great decision to shut that down instead of take on the problems that Facebook and Snapchat and all those other ones have kind of found recently. So I actually like the decision to shut down Google Plus. I like the decision to shut it down in the face of the security breaches. Obviously, you're relatively weak today, but personally, I'm not taking that news that negative of shutting down Google Plus. My question to Cody when we were talking about it earlier was, who do you know that uses Google Plus? I mean, out there, and I know I don't use it, but I'm sure some people do. Does anybody here use Google Plus in any capacity? And so, to me, I felt that was a good decision on Google's part. I am more interested in Google to see how it behaves at that 200-day moving average. That is what I'm more interested in Google. I don't think you can pick it up here. If you're looking at, again, those tech stocks, you got to stay away from the Amazons, the CRMs. You got to stay away from some of those, you know, ones that are showing bearish activity. But Apple and Microsoft, those two are potential really good plays right now.
Yeah, I'm with you. Tech's always going to be in the focus. It's not the only place in the market here today that's showing me some interesting action, though. I do like crude oil. Let's get into the commodities here next. Start with the dollar, actually, Matt. I really think from a top-down approach, you know, the dollar is always going to be the most important one. Here we are sitting up at a high point, stuck in the middle of the range. I'm still neutral from a perspective, right? But who knows where it's going to go from here. You have rising interest rates. You have rising treasury yields. Do you have any directional bias on the dollar here?
No, I'm with you, Tim. Fundamentally, the dollar should be bullish over the next foreseeable future, right? So I'm with you on that from a fundamental perspective, and I do believe we're going to get some good opportunities on a buy on the dollar here in the very near future, especially against the Australian dollar, the Japanese yen, and some other cross currencies out there. But when I'm looking at currency right now, Tim, I'm not really getting excited about trading the dollar right now. I'll tell you, when we were looking, Cody asked me a question. He said, hey, Matt, what do you think of a long dollar short yen trade? And I said, okay, let's look at the dollar versus the yen. So USD/JPY, right? And this is a really good buy signal. There's no doubt about that. I love that buy signal. It's coming back down into the 20-day moving average. It's slowing its momentum right there. You could definitely see that triggering on the dollar, especially if the dollar index, think about this, Tim, if you see the dollar close above 96, that US dollar Japanese yen trade will be really, really, really good. But there's some variables there, i.e. if the dollar does in fact go up above 96. Number two, you have economic reports that impact the dollar, and you have the dollar as the reserve currency of the world. The dollar is going to be impacted not just based on U.S. economic reports. It's going to be impacted based on every economic report around the world. So instead of trading the dollar versus the yen pair, what I suggested to Cody was to look at the let's see, it was the CAD yen pair. And because I'm extremely bearish, not extremely bearish on the yen, but I am bearish on the yen, but I'm also pretty bullish on the Canadian dollar right now. And you're seeing this come right smack dab into an old resistance level. You have a very similar type technical move on the CAD yen pair versus the dollar yen pair. But if you can remove the economic reports and the and the uncertainty and the variables away from the dollar and look at the CAD yen, that to me is a better currency trade.
You know, there are some interesting cross pairs setting up in the currency markets. A couple of weeks ago, I remember you and I were sitting there looking at all the Forex pairs and we're like, well, there's not a lot of swing trades set up. I don't think that's true today.
No, there's some good setups happening in the currency market.
Yeah, I agree with that. Give me crude oil next. One of the best setups in the market, in my estimation, is this crude oil chart. Now, it's not a Goldilocks retracement, which is my concern, Matt. I wanted a little deeper action on this thing, but now you got a pivot trigger. Is that a tradable signal? And Absolutely. Is it the kind of thing you pull the trigger on?
It's technically sound. It's not perfect. There's not a perfect setup out there, but it is technically sound. Number one, you're coming into the old resistance here at 74. You actually did. I mean, if you look at this retracement from peak to trough here, and you're looking at from this to this, you do have a 38% retracement. So that does technically work as a bullish retracement. Upward movement in price above the previous day's high. That's technically sound. I
agree. I think it's tradable. You know, it's one of those things where it's more of a swing trade type setup, in my estimation.
Absolutely.
You've got a real strong trend. You have old resistance, new support, and commodities in general have been very, very strong. Obviously, the energy spaces. Crude oil has been great. Quite frankly, natural gas has even been better. We'll get to that one here in just a minute. USO is the number one ETF to track crude oil. Now,
let's set up this trade on USO, though.
Well, before you do that, though, I want you to think about something.
Yeah.
Is it better to play USO or UCO? USCO is a 2X ETF. It's got not USCO, but UCO. So this is the ultra. It's liquid. It has options. It just moves twice as fast. One of my concerns with USO the last year or so is that the price has gone down so far. I can't get good new naked put credits. You know what I mean?
Oh yeah, it's very tough to do the boomerang on USO. Yes, I do agree with that.
Yeah. So if I like this UCO play, it's not a 3X. I don't really like 3Xs at all, by the way. I don't trade them personally in my own trading. A lot of students who trade 3Xs and 4Xs, they end up getting that real negative.
I've seen more people get beat up using leveraged ETFs on and then using options on leveraged ETFs, and they don't understand how leveraged they really are.
Yeah.
Right? I mean, when you're talking about buying a call option on UCO, you know, on a 2 times ETF, you're talking about 20 to 1 leverage there is what you're talking about, Jim. And I don't think people understand how much leverage that is. So I've not really been a fan of this evolution into these 2 times, 3 times, 4 times, you know, ETFs and then leverage on leverage. I mean, it gets to the point where it's like, really, that's the only thing our entire economic system is predicated on is leverage on leverage. And we know how those play out. And economically, those play out with markets getting absolutely slaughtered over time. And with traders, that works the same way. They usually get slaughtered over time. So if you're looking at this from a covered call naked put perspective, you're also going to understand that you're going to have to manage that trade a lot more carefully.
I agree with that. I agree with that. And, you know, it's not that I think everybody should be doing it. I know for me, I've been debating UCO, USO for a while now, and I tend to still trade USO. It is just very liquid. But Matt, the liquidity on this thing is quite impressive. I will say that. If I look at USO, the volume today is 13 million shares. UCO has, over a million. They have weekly options. They got penny spreads, not like the USO. The USO are literally a penny, So it comes down to preference. For most traders, the USO would be the
yeah, those bid ask, you can't do covered calls here. Those bid asks are 40 cents on $1.90. I mean, that's a wide bid ask spread for a $2 option, bro.
Yeah.
I mean, that's 20% on the option price. So, if you're looking out 73 days, looking at a swing trade, yeah, they do tighten up here. They absolutely do tighten up. You could directionally play this. I just, covered calls on UCO, I just don't see. I don't think you got the liquidity there in the options market yet. You can play this directionally though. So let me do something here. Okay. Let me do a cross comparison for the halftime crew. I'm going to prep the exact same trade on UCO versus USO, and we'll determine which one's the better play. Okay. All right. So let's first look at USO, and we're just going to prep this as a standard type swing trade. All right. Now, here on the USO, obviously it's an upward movement in price. We're going to buy options here. So we're just going to enter it at the current price because it's already confirmed. I'm going to put a stop loss right underneath this pivot here at 1550. The HER on this bad boy right now is about 30 cents. I'm going to put it about 15 cents under 1550. So that's going to get me right around 15, that'd be 1535. Okay, now targeting on this will be a little differently, but I'm going to target potential average yield, just average the previous two price movements here. And the first one goes from 13.5 to 14.75. 13.5 to 14.75 equals $1. 13.5, 14.75, that's $1.25. The next one goes from 14.25 to 16, that's $1.75. Average those bad boys out. I'm going to target 150 off the pivot, which means my target is $17. So just to reiterate what I just did, ladies and gentlemen, is basically just applied my stop loss rules, 1/2 ATR under support, my targeting rules, potential average yield support 1550 plus your potential average yield. So now, Tim, if I go to USO here and I say, okay, let me go and buy some stuff here. Let's go buy some stuff. Let's go buy an option. Let's go 73 days out. Let me go buy a 0.60 delta. And I'm just going to do just one contract to compare the profit loss ROI potential. So if my target here is 17 and my stop loss is 1535, Tim, I have an $84 potential profit for a potential $25 potential risk at the outset of the trade. So the probability is going to be the same. You're looking at the same type of ETF. One is one is 2 times, one is just 1 times, right? So here on UCO, again, I've never traded UCO, but I'm just going to apply the same type of techniques here. So if the stop loss goes under support, this time it'd be under support at 36. The HER should be right around 1. Okay. HER is 140. So the 70 cents under 36, that's 1/2 HER underneath the support level I identified at 36 would be 35.30. My target would go from 27.5 to 30. We'll just call it 33. That's 5.5. Next one goes from 30 to 30. We'll call it 39. 30 to 39 equals a $9. Let's average those out somewhere around 7. What would that be?
Let's call it $7. $7.25. Yeah.
So 7 support plus pay would put you right at 36 plus 7.5. Would that be 43.25? Okay, so got my stop loss, got my entry. Let's go buy that same 60 delta contract. Now the contract on this one, Tim, same time frame, same delta. The contract is going to cost about 4 times more money. Okay, so I'm investing $90 per contract in the USO trade. I'm investing $4 in the UCO trade, and that's because of volatility increase, correct? Okay, so I'm paying a higher price, but obviously I'm going to have a higher return and a higher risk as well. My my target 43.25 to my stop loss of 35.30. Okay, so my investment would be $4.20. My potential return would be $4.16 at the outset of the trade. My potential risk would be $1.29. So to me, you got a very similar return versus risk ratio from a percentage perspective. But because you have to pay more money to get into the trade, I like the USO trade a little bit more. Plus, USO is extremely liquid.
Yeah, it's one of the most liquid ETFs in the world, in the market, quite frankly. Love the analysis. Love the risk graph analysis too. You know, the price slices are a way for a trader to map out the potential reward and risk. I saw a question. Actually, I did a video on how to answering the question in our clubhouse the other day, Matt, where Solene, who's one of our, most common members, she's very active. She said, Tim and Noah and Tyler and any coach, explain how to use the risk graph in a very simple way, right? And what you're doing here, this is what traders do. They dig in, they try to map out the potential reward and risk so that they can make trading decisions. It's just a calculator at some level.
That's all it is. The only thing a risk graph is a calculator, So Tim, what's 2 + 2?
4.
Okay, that's my calculator, right? Okay, what this risk graph does is it calculates profit loss based on price projections. So it takes your trade and it tells you how much you're going to make or lose on different prices, okay, on different prices. So the risk graph doesn't need to be complicated. It's just like everything else in life. The first time you do something gets complicated, right? That's why you go ask for help, and that's exactly what happened here. But all it's doing is it's telling you, profit loss at different price points based on strategy. So if you buy a call option on USO or if you buy a call option on UCO, the risk graph is just indicating how much money you're going to make or lose based on if the price goes up or if the price goes down.
Yeah, love it. Let's break down the other energy areas as well, Matt. I know that Brent crude has been better /BZ, but all of the energies have been strong. Why is it that Brent has been outpacing light sweet, by the way? What do you think?
It's the cost of one versus the other. Obviously, in the West, we use the West Texas sweet crude oil. That's what we like to call it, West Texas oil. West Texas oil is lighter in weight. It's also easier to combust down into gas-related products versus Brent crude oil. But let's get our Canadian stud, Greg Holmes, on, and he can explain a lot better than I can.
Who else could explain that is old Franco. He works down there in Texas in the oil industry. Franco Coria, who's a guest writer for the Environmental Hedging blog. A lot of that is the chemistry behind it. Obviously, Brent has, from a chart perspective, has just been a juggernaut.
It's been outperforming ever for the last 3 months. I mean, it's been an absolute tear. We've talked about this in our Scout reports, our Scout report meetings on Friday every week for the last 2 months about how Brent's been outperforming. But in the U.S., we don't trade a lot of Brent crude. We trade primarily crude oil.
Yeah. Give me natural gas next. One of the strongest areas in energy has been natural gas. And I still think it's just bullish. It's not at an entry point today, right?
Well, it's overextended. Wait for the pullback, then hit it.
Yeah. I love this one, though. It's been very, very good. Moving on to the metals. Give me gold and then silver.
Paul, I'm not sure there is an ETF for Brent crude. I mean, if somebody could do a quick Google search on that, I've never traded Brent crude, not in the futures market. Like I said, I've primarily traded USO and crude oil.
Mm-hmm. Cody, that's you, bud.
But that would be a good find, though, because Brent has been doing really, really, really good.
Mm-hmm. It's been a juggernaut. One thing I like about gold right here, Matt, is it's finding some support. I know it sold off yesterday, doji today, dollar at a high point. Same conversation we had yesterday. Chart really hasn't changed. Do you need that to confirm above 1220, or have you moved down your trigger point at this point?
No.
1220.
It's 1180 by 1220.
Yeah, somewhere in there. Silver is an area that I'm also very interested in. I've got a trigger at $15. That's what I'm looking for, is a $15 trigger. We're a lot different from where that is. /BZ is the futures contract for Brent.
Contract.
Yeah. We're looking for an ETF for Brent.
Okay, I'll check.
Yeah. Tim, serious question. Can you see a potential buy before 15?
Physical, yes. Probably not on the paper. No.
By the way, had the great Pete Thomas on the podcast yesterday, guys. So if you have not listened to the podcast, Every time Pete comes on, I learn something new. And Pete said yesterday, he started laughing when I asked him about the valuation of silver. And he said, if you're not buying silver at 14, what are you doing?
BNO.
Say that again, Cody.
BNO. Bravo.
BNO?
Yep, BNO.
Well. I just got excited. Let's look at it real quick.
See if it's liquid.
Volume's light. This is the problem. Volume's light, as it will be. It's like I said, we trade mostly crude light and USO in the U.S. Volume and open interest, there's nothing here.
Yeah,
so
yeah.
It would be a stock play. You could buy stock here.
I'll have to dig further into that. There might even be companies that are sensitive to Brent crude oil prices that might be correlated and whatnot.
Seems like a nice little task for our amazing researcher, Cody.
Might be an after the market type of thing. You know, when I'm in the market, I don't try to find new stuff that I've never tried.
But that's interesting. I mean,
I agree.
I've like I said, I've never traded. It's very illiquid. But you know, a lot of ETFs start out as illiquid, Tim, and then they gain traction over time.
Yeah, I agree with that.
And really quick, Tim, before we move on, what happens, guys, with a lot of these ETFs is same thing with individual stocks. As they become more popular trading instruments, the market makers will introduce more options for us because of the demand for those options. But Brent's just not there.
Yeah, for sure. You know, we are at the halftime point of the halftime report. So if you're out there and you're watching this right now, guys, welcome. #halftime crew. Give us a quick like and a share. We always like to get the word out there. Love coming in here and doing this. Now, Matt, what I want to do at the next half hour is kind of dig into some of these different companies. There's a lot of things that are on my mind right now. One particularly, and I'll tell you guys, I want to give a big shout out to one of my students. And Cody, I don't know if you're watching today, but Cody and I had a conversation today that I thought was one of the most impressive things I've heard from a student in a long time. Mm-hmm. And he had recently had some trades that got stopped out, you know, like many people in the market the last week or so.
Who in the market has not had some trades get stopped out the last
Of course. Week? So let me break it down as simple as I can. He had a drawdown and he hedged it, Matt, perfectly, took the hedge off perfectly, took the losses on the trades he was supposed to, did not trade emotionally, and executed his trading plan. And at the end of about a 30-minute conversation, I made a comment to him, and I want to get your take as a mentor and a coach. I said, Cody, this week you lost money, but this was the best week I had seen you as a trader because you executed with it, even in the face of emotions and losing within your trading plan rules. It's much more difficult, you know, when you're dealing with adversity, isn't it?
Absolutely. I mean, when you go from bullish to, you know, flip the script and an Allen Iverson crossover to bearish, it really is how you respond to that shift in price action that can stop the bleeding, number one, but also two, you know, prepare you for more opportunity. And number three, Cody, just wait till you do it next time. You'll be a robot.
You'll be a robot and you'll just kind of execute based on what you see. I loved it. I love seeing it. I love seeing the execution without emotion and just focusing on trading plans. I thought it was really great.
It's an important journey in a trader's in a young trader's life. Would you agree?
Oh, there's no question.
You know, being able to handle adversity when the markets do change and the volatility changes. And that's why I've said for a very long time, there's no way you could ever learn to trade unless you dedicate a portion of your life to this, because you have to do it on a daily basis. You have to be able to, you know, see the different markets and how the market evolves. You know, I was writing not an article, but I was writing something to a business partner of ours yesterday. And I basically said that as markets evolve, we have to be able to evolve with them. You know, from an education perspective, you have to evolve your educational products. You have to evolve your trading systems. You have to adapt your trading rules to the market over time. And you know, talking to you about what Cody did, you know, he took a 3% drawdown on a market volatility that could have crushed him as an option trader, and he responded appropriately to him, and very proud of him for doing so.
Yeah, I thought it was great. A lot of stocks on my mind here today, Matt. Walmart had an upgrade. I like the chart on this one. There's quite a few in the news. We're going to rattle through.
Well, let me get your take on a couple of these upgrades.
Sure.
Tesla got upgraded today.
That guy should get fired.
He should get fired, right?
What? I mean, how do you upgrade Tesla in the automaker space? What did he?
What are you doing here?
Yeah.
I mean, if I was the CEO of that finance company, it's like, hey, let's upgrade Tesla to 430. By the way, they upgraded it to price target of 430. I just thought they made a tremendous mistake. There's an obvious joke there. Upgrade Tesla to 420. That's what you do. But they upgraded it to 430. But Tim, if you're looking at Tesla and you're looking at the enormous volatility and uncertainty around Elon Musk right now, still losing his mind, and you're seeing an upgrade on Tesla, what are you seeing in the fundamentals? What are you seeing in the chart? Are you upgrading it simply because you think it's going to outperform the other dogs of GM and Ford?
Well, Ford, GM, Tata Motors, all of Daimler Chrysler, all of them, they've been absolutely crushed in a long time. So if you came out and said outperform against the rest of the trash in the industry, that'd be fine. But he raised the price target too, man, which is like crazy to me. Yeah, Tesla had an upgrade. Walmart had an upgrade as well, I believe.
Walmart did get an upgrade to a buy, and obviously you're seeing real good price action here on Walmart.
Walmart, after that earnings gap, it's really been a boring stock here for a couple of months, and you've got another earnings coming up here in mid-November, about a month between now and then. A break at 96 could be short-term tradable, or 97 right there, but I don't know if I'd even pull the trigger on that, Matt.
I mean, I got excited to trade Walmart for the first time in a couple of years off the earnings gap pullback. Basically broke even on the trade here. I'm back to, I don't care about Walmart.
Yeah. I respect the chart. I like it. A break at 100 would actually be more tradable, in my opinion, from a swing trade momentum standpoint. Just because
I'll care about Walmart when the recession hits.
Yeah, could be the case as well. Another one that I really like is Boeing. We talked about industrials, and Boeing's been on our target list for a long time. I traded a lot. It's one of my favorite companies. The pullback here is now developing. It even pivoted and triggered today if you take the tip. But
triggers 10% of ATR above. It hasn't triggered yet.
Yeah, that doji candlestick tells me indecision. Might have a deeper pullback here. When you've got a trend line, Matt, because if you connect the pivot, you are on a trend line right here. And you also have 5 candles in a row that have had lower, highs on the candlestick. Is this a tradable area right now? Are we at a technical catalyst?
I mean, yeah. Are you on that? You're on that trajectory there, but that trend line trajectory cannot be sustained.
Mm-hmm.
So I don't buy the trend line just because I don't think you can sustain, a 90-degree angle up. That just doesn't work out like that usually. I would love a pullback down to the previous pivot. You might not get it. And the thing you got to be concerned about with Boeing, Tim, is if you wait too long and the setup takes too long, you got earnings coming up later in October.
I agree with that. And you never know when the market's going to take off and run. Some people would take this signal up here. Others would wait for a deeper Goldilocks retracement. It's on my radar.
I love this company. This is one of my favorite companies in the entire world. And I think they do such a fantastic job. And you're picking it up here. I don't mind it.
Yeah, I do like it up here. There's a bunch that I'm also bearish on, but I want to stay with the bulls here for a minute. We talked about Microsoft. WWE has been a stock that I've been targeting here for a while, and I do like the deep retracement, and I actually like that 50-period moving average. Nowhere near a signal yet at the bottom of the candle here today, but you're at old resistance. You're at a support zone. You're at the 50. In a stock like this where you get changing momentum, Matt, but you have it on your bull list, does that make you pause? Does it make you say no? Do you disqualify it? Because that momentum is rolling.
Well, yeah, but I mean, how many times have we seen the 50-day moving average act as support this year in almost every stock out there?
Mm-hmm.
So would it stop me from making a trade? Absolutely not. Give me a doji, give me an upward movement in price, and pop some call options or a bull call spread there.
Yeah, I do like that one. Some bear stocks and then
I got a few bull stocks very quickly. One EC. This was on the stock report from this week. Pivot candle, upward movement in price confirmation, like that from a stock play perspective. Good momentum here, kissing on the 20. AMD, Tim, I want to get your take on this. We've looked at AMD a lot. Mm-hmm. Okay. I mean, we've traded AMD quite a bit over the last few years. AMD was one of our best performing covered call stocks over the last few years. It's been on an absolute rip tear since April, right? Just a tear since April. You really have only had a couple buying signals on AMD in that time frame, though. You see the breakout right here after the earnings report. That, I missed that. That was a great entry there. You see the breakout off the flag pattern here in later part of August. Great breakout here. Boom, look at that fly. Then you had a little bit of a breakout off a high base here, but that one would have been tricky to hit, okay? These two, not so much. That one would have been tricky to hit. Ever since then, though, it's been overextended. You get that retracement down to the 50-day moving average right here, upward movement in price, Tim. AMD's a stock that can fly. It's boomer bust type risk return. But what about AMD here?
I love the company. I've loved it for a long time. It's a good covered call stock, but I don't know if it is really set up for covered calls right now. The one thing I would have a hard time with covered calls with for other people, I would probably be willing to do it because I have very specific rolling mechanics. Matt, if it flies the upside, people have a hard time.
Oh, I'm not thinking covered call here, T. I'm thinking
directional bull call or something like that. I can see it. I mean, if the market does want to go back up, it's got.
I'm thinking call option.
Straight call.
That's aggressive. Okay. Talk me off the ledge here.
Your volatility is 77%. Using a spread will neutralize the volatility risk. That's it. If you want to just be more conservative, you'll still make a good return on a bull call.
Well, what I'm thinking though is we go call rotate into bull call.
That's fine.
You buy. So the plan of attack would be you buy the call here, right?
Yeah.
As AMD gets into $30, which is a significant whole number for AMD, plus a depressing 20-day moving average. At that point, given the uncertainty of whether or not it's going to get up above it, at that point, then you sell the call against it.
I could see it. I mean, I love the mechanic of taking a long call into a bull call. That's one of my favorite things in a market. And by the way, that should be pretty quick too,
Well, and here's why I like it, okay? It's got tremendous return versus risk. Number one, look at the high base here. Smack dab into that high base right here, okay? Kissing on the 50. Mm-hmm. Easy stop loss placement right under the 50-day moving average, right? So if you have support here at if you have support here at $26, right? And your ATR is currently $1.75. Like I said, this sucker does move, and it moves aggressively. And you put a stop loss, say at 25.25, just to give a little bit of a number. And let's say we only target the previous resistance area. We don't even target above the previous resistance area. So we're doing a little conservative target at 34. So if I come here to the Analyze tab and we add a simulated trade, I'm going to go out 101 days just to give me plenty of time here. I'm going to go pop some call options. Okay, just one contract, put it into the mid price of 380. So I'm paying 380 a contract in. My target of 34 and my stop loss of 25.25. Okay. I got a 480 return for a potential $136 risk per contract. And the plan is we sell call options deep out of the money to offset the risk as it gets to 30. That's the plan.
So 30 is about $2 and what is that? 280 away.
You're 2 days in a standard ATR from hitting it.
Yeah, that's about 2 ATR away. So, I mean, I'm okay with that. You could even say 1 ATR and do it at 29, which would be reasonable as well. I like it. I like the mechanic. I like the plan.
I really see the last few days as market related and not AMD related.
I agree. I agree with that. And here's the thing in markets, and I think that there's a very obvious and very smart thing that's happening here. When you're a trader, you don't know where the market's going to go, and you have to prep and get ready for any direction that might take, right? I mean, think about the things that I was talking about today. There are stocks that I'm targeting if the market goes back up that I feel confident in. That's what we say, stock pickers market. But there are stocks I'm targeting if it goes nowhere, and there are stocks I'm targeting if it goes down as well. AMD, it is a good setup, 50-day moving average. You want to wait until that thing breaks above 28 and do the same thing. You're giving up 75 cents.
Nope. I would do it now.
I don't have any problem with that, brother.
This is what I talked about. we talked about this yesterday. When the market's coming down, don't short it at the bottom. Wait for that intraday retracement, right? We talked about that with Wayfair yesterday. It worked out perfectly. AMD here, you missed the initial price movement on the market open. You're like, oh, shucks, I can't do anything because it's, I got to wait till it goes above the high. Well, I mean, that's fine. That's conservative and there's nothing wrong with that. But I'm looking at this on the intraday perspective, good price appreciation, short-term intraday support, short-term retracement coming down from an intraday perspective, upward movement in price. You can do that right now.
Not only that, I got to tell you, as you're looking at AMD, I'm looking at Apple, Amazon, Baba, Facebook, Google, Microsoft, Netflix, CRM, and the NASDAQ at large, Matt. The NQ on the intraday is looking like a good setup. So Apple, if you get Apple, first of all, they're all looking good intraday right here as we're going into mid-morning. This is the type of stuff when you're talking about timing. The market recovered early. It now pulled back into old, resistance on the intraday. This is a pivot trigger. Now, it's not a slam dunk. It's not the best signal I've ever seen, but I expect higher prices through the end of the day.
If you had to give me over, under, right, the entire market, whatever it is right now, do we go up or down the rest of the day? I would take the over.
Yeah, I agree with that, which would lead to the AMD idea as well. Very good. There's a bunch of others. You actually mentioned Intel as well. What was it?
I did. I was looking at the Tackle 25 stocks as I do every single day, just part of my routine. I just quickly go through each one of them to see which ones are, bearish, bullish, which ones need protection, stuff like that. And, we've been bearish on Intel and we've kind of given it a hard time underperforming a lot of those others, especially in relationship to AMD here. But look at the inverted head and shoulders formation happening right now on Intel. Tremendous bearish activity over the course of the last 3-4 months on Intel. But I'm seeing this not only slow down, Tim. I got a left shoulder, I got a head, I got a right shoulder. You just got to wait for it to break back up above the 200-day moving average. But that is something to put on a watch list.
They had really good news over the last month too, trying to get that company turned around. It's a good company. Everybody knows it's a good company.
Great company. Just because a company's bearish doesn't mean it's a bad company.
Yeah. I like the rolling moving averages.
Let me rephrase. That's not all the time.
I saw a news headline on Snapchat. They're quickly running out of money. The company may go bankrupt.
$280 million a quarter, Tim. Yeah, and hold on. It's okay to lose money in a quarter if you're a publicly traded company, if you're expanding your business, right? Facebook's a debt-driven company. That's perfectly fine because you know what? They've been expanding their business. Twitter, same thing. But on Snapchat, they have a decreasing population that uses their services. I said it was a trash company when it came out. It's still a trash company, all-time low for Snapchat today.
Their CEO did come out and say that they are looking at profitability by 2019. We'll see it when we see it. Snapchat, not one of your favorite, is it?
It's a terrible company.
Pretty much trash company. I agree with that. I do like US Steel down at the bottom as well on the Tackle 25. If you were interested in that,
I said this in the prep here today, Tim. But the one thing that has surprised me in the last month, given what the market's been doing, is US Steel has done nothing.
Yeah,
it's been great cash flow. Don't get me wrong. But I'm a little surprised that we haven't seen some price appreciation or depreciation, given the fact that the market's been fairly volatile over the last couple of weeks, and U.S. Steel is just kind of here, just hanging out.
There are some companies that have earnings coming up by the end of the week as well. Just a quick note, guys, we are moving into earnings season. Every trade that you take, double check your earnings dates. Walgreens, Delta Airlines, Citigroup, JP Morgan, Wells Fargo, quite a few. We will prep
Delta, American.
Yeah, not till Thursday and Friday. So we can prep them tomorrow and Thursday. But we're going to start hitting it pretty heavy by the end of the week. And then next week, Matt, is full blown.
Tim, I think this earnings season is vital.
For the market?
For the market.
Yeah, I agree with that.
I think it's vital.
We had a record earnings last quarter. The market has all this anticipation. You got to understand, markets always price 6 months in advance. And so if you have a lackluster earnings season, the market's going to want to price that in and pull it back, and you're going to have a deeper correction. I have concern about it as well. We'll see how it all shakes out.
Well, it's also the thing that it's like when you set a new standard, that's kind of what you expect to a certain degree, right? And we knew earnings coming out of the second quarter was absolutely a blowout amazing. I mean, it was just great. Every company, it seemed like almost every company was exceeding expectations, increasing guidance. Everything was positive. I am looking at this earnings season, and specifically what I'm looking for is if we do see some negative earnings. And I anticipate a little correction on our earnings. I don't think we're going to exceed what happened in the second quarter. But, it will be close. I just don't expect it to exceed it. But what I'm really kind of looking for is in these conference calls, do these CEOs of these publicly traded companies start blaming the trade wars for some of their loss in revenue? That's what I'm looking for. I honestly think it's vital for the market.
Yeah. Yeah, very good. Cody, any stocks you have an eye on here?
What is it? EVS, I believe. It was on the report. It broke out yesterday, or no, ESV, excuse me. Had a high base pattern yesterday. I'm really liking that one. It might be a little bit overextended today. Something to get into, but I definitely like that one. Whoever found that one on the reports.
Yeah, definitely breaking out some strength.
I'll take credit for that one.
You'll take credit for that one?
Yeah, I put that on the report.
Mm-hmm.
And that and EC is setting up as well.
That's beautiful.
Yeah, this is the one we looked at earlier. I like that one too.
Mm-hmm. One last one I want you to look at, Matt, from my side. Then we take your last thought. And then there's a couple items I want to announce. WTW on a breakdown. This was not on the last week's report, but I've had this on my bearish watch list for a very, very long time. Breaking below 65 would be significant to me. This is a stock that has been pummeled in the back half of this year. And in a market where there's risk, a market where there's concern, their earnings do not justify the price, even at 65, guys. So I would be very much bearish if that broke support.
Hey, if that breaks 65, that's a quick 60 target.
For sure.
And you might be like, that's only like $5. That's 8% of the stock. That's a great trade. On the option, that's a home run. That's one to keep trying. If it breaks 60, Tim, you got 50 in the wheelhouse. That's something we all should look at on Weight Watchers, that 65 handle.
I love these ugly stocks. I play them up, play them down, play them nowhere.
The funnest thing in the world is trading bearish, overvalued stocks as they're getting pummeled. It's the easiest trades in the world.
By the way, I saw a request in our clubhouse to look at a stock today during our halftime report. Let me see if I can find it. It barely flashed through. I saw a little alert. If you're not in our clubhouse, by the way, everybody, make sure that you join. It's a great way to communicate with other students. This comes from Marco Collado. He says, hello, everybody. I'm contemplating a paper trade on PX. Stock is at 163-ish. Earnings are 1025. And short strangle November options, 38 days till expiration. Short the November 180, 145.
What's the trade?
He wants to do a short strangle on a stock 38 days from earning, or 2 weeks from earnings.
No. No, Marco, no.
I mean, listen, 185 and 145 give you a lot of cushion. There's no doubt about it. I think there are better ways to cash flow. Instead of
volatility could even escalate even higher over the next 3 weeks coming into earnings.
Yeah.
But it's not just that. This stock, I know this stock can move aggressively.
Yeah.
And this stock has, a little bit of schizophrenic behavior with its gapping personality.
Mm-hmm.
So
if it's me and somebody asked me if I want to do a neutral cash flow short volatility trade 2 weeks from earnings, I'd be open-minded to it, but I would probably consider a condor even before I'd think about a strangle here.
I don't mind the practice here,
Yeah.
and not in any capacity. I think you should always practice, right? Practice. As traders, we're not Allen Iverson. We need to go out there and we need to practice, but it's just, again, it's not a bad setup from an overall volatility play. You do have high volatility here. I'm sure you're getting a wonderful ROI projection on your probability, but this is just a schizophrenic stock that has a tendency to gapper mentality.
I agree with that. Market's going to be interesting the last 2.5 hours here, guys. Make sure that you have a plan in place and make sure that you handle any kind of hedging or risk that you need. Trade without emotion, trade your rules, trade your plan. There's no doubt about it. Matt, we got quite a few things going on at Tackle Trading this week. We got our coaches show tonight. Mm-hmm. Tomorrow, we have our Bear Market Survival Guide monthly mastermind group. Sweet. So anybody who would join that, make sure that you get the time on that tomorrow over on the events calendar.
Talk about good timing on that mastermind group.
Yeah, for sure. I mean, I'm going to be there. I want to hear.
And guys, you got to realize in those Bear Market Survival Guide, we talk about when to add portfolio protection to your retirement accounts as well.
And then Thursday's our cash flow club. The weekend reports will be coming out later this week. Everyday Coaches Lounge.
I'm on Forex report this week, Tim. I'm excited about it.
Are you on the Forex report?
I am on the Forex report. It seems like me and Keith are going to be alternating weeks here. I always love getting Keith's analysis on the Forex report, but I just, Tim, this week is the anniversary, the 4-year anniversary of the first scouting report. It was October 14th of 2014, and I was sitting down in my office, kind of what I'm doing here today. And I thought I was doing some trades, and I was buying the dollar against almost everything, Tim. I mean, I was nailing it against the yen. I was nailing against the pound. I mean, you name it. And I was like, wow, this is really cool. What if I just, downloaded Camtasia and took a quick recording and sent it to all of our students? Mm-hmm. And I remember that Forex report very well, Tim, because not only was it the first one, but in that report, I think it went up about 2,000 pips in the first week on those trades. And that led us to get a lot of requests to do more reports. And but that's how the scouting reports were kind of created. Was there on October 14th of 2014. And so, on October, 13th this Saturday? Yeah, I'm doing the Forex report. It's the 4th anniversary. I'm sure I'm going to have a lot to say about it.
Well, October the 13th is also another day.
Yeah, I was in India last year. We got to make up for that one.
We will make up for it, by the way. And I'll announce that later in the week. My big brother's got a birthday coming up here, so I got to do something nice for him.
41, brother.
Yeah.
41. Yeah. We're getting up there.
Well, that's one of the reasons why I'm so grateful to be able to be home and be a trader, Matt. This morning, my daughter's home from school sick today. My other daughter, I got her up and got her breakfast. We get to sit here and, help our community and talk about markets. I feel very blessed. There's no doubt about it.
Trading has allowed us to have a life that we never knew, we never envisioned as we were growing up, Jim.
Yeah.
And as we were growing up in good old fashioned Emory County, Utah, coal mining community, Dad told us as we were growing up, do whatever you can to get out of here. There's no future here. And so he told us to go to school, go to school, go to school, go to school. And that's what we all did. Right. Every one of his kids, 7 children, all have higher education degrees, when not one justice in our history has one. That was because of our father and what he did. But what he didn't understand, what I don't think he understood, was what he really kind of taught us, the values of entrepreneurship and taking control for yourself. And, 13 years ago, Tim, when you and I faced an opportunity to say yes to something, I will forever be grateful to you personally for forcing me to say yes to learn how to be a trader, because that stopped me from being a lawyer.
You would be a great lawyer, but you're just much happier this way. Yeah, I agree with you, brother. Hey, no problem. I mean, that's what we're here for. And by the way, we'll be back here tomorrow at the halftime report. Give us a like and a share before you take off from the YouTube channel. We love having you guys. Halftime crew, it's great to have you. Matt, great job today. Cody,
great job, guys.
Check the market. The last 2 hours going to be
halftime crew.
Yep. See you.